Hello again, and welcome back to another daily technical analysis video. In this video, we'll be covering BNB, and we're going to start on the daily time frame. Now, as you can see, our downtrend has been continuing so far, and we have actually broken the daily S2 previously here, which was in confluence with the 55 pocket from this previous impulse. But nevertheless, we looked out for our next levels of support, and so far we are actually testing it right now. Not only is it the bottom of this channel, but I do believe, yes, it's also part of the previous wick right here. It's slightly weaker because there's not as many bounces. It's not as clear as the bottom right here, which is actually a little bit lower and closer to the 377 EMA. So again, if we do break this, we would be looking for the lower levels, which would be the 377 first, followed by the daily S3. As of right now, the momentum still is pretty weak, and actually looks like there's a lot more room to expand towards the downside, so it's pretty likely that we could see some sort of break below this channel and actually a test of this level. I believe for a support level like this horizontal right here, given that there was many bounces off of it, it starts to weaken its structure. But what we're going to play is, if we do get a break, we can play a break and retest of it for continuations to the downside, and then with that we have to assess further horizontal levels based on the actual price action. The EMAs just started crossing the 55 yellow, crossing down the purple 100 EMA, so this might actually add more fuel towards the downside, but we do want to first see the reaction to this 377 and see whether there's any support found off of here. But as of right now, because the general structure towards the downside, we want to stick with shorts. So right now on the daily, it doesn't seem to be any setups for the shorts. So what we can do is actually look into the lower time frames and see maybe that there is any. So previously when we were discussing, we were right here. We did see the uptrend here, but actually it turns out it's just a retracement of this greater impulse. I don't think you could see that on the daily time frame. Not quite. So this one's a little bit tricky. You got to keep in mind, I guess, that the overall structure is towards the downside. Now the EMAs are obviously very bearish, in diverging towards the 4 o'clock, which adds confluence for the bears and fuel for it. As of right now, the price action is pretty far from the 21 EMA, so it would be great to see some sort of consolidation or a retracement back closer to the 21 before continuations to the downside. Now we want to look for those continuations to the downside because, again, we are in the general downward motion, downward structure, and also a bear sentiment of the markets, even in the traditional markets, really. Now in the 4-hour time frame, our momentum towards the downside still, and it's actually starting to reach the oversold territories. Now this therefore indicates more strength for the bears, and we could see continuations further down. But we do want to again pay attention to when it does cross back up to 20, because there could be some sort of reaction similar to this one, whether it be a big move or a small one. Right now we are actually bouncing off of support on the hourly time frame, the HS2, which is close to the previous low right here, which could also be a 4-hour support level. But we want to watch how this reaction occurs here, and potentially that's where retracement can initiate. Otherwise, we could be seeing the lower levels to be hit. On the hourly time frame, the HS3 is at 370, but the 377 is 388. So around this range, I would believe you could see daily bounces off of here, but we can also fall below that to the daily, to the HS3 for either wicks or a target after these levels. Now if we go even lower to the 1-hour time frame, we see significant volume on each successive red candle, at least recently, and therefore a lot of selling pressure coming into the market. The momentum is oversold and still declining, and still has room to be in the oversold, again similar to the 4-hour, so we could be seeing more to the downside. One thing we want to pay attention to is this low right here being formed, but a actual higher low on the RSI, and therefore a divergence. And because of the divergence and the general strength towards the downside, we could see a small little retracement react off of that before continuing downwards. Actually, what I'm going to do, okay, that works too, even though the 377 is slightly above, but here's the daily support levels for reference. Now if we do start to bottom off here, maybe we can look at the 15-minute time frames to see whether there's a reversal pattern coming in at above this support level. But we could see a level like 55 pocket being hit, maybe even somewhere right here, we can place our stop loss above there, previous high, and actually target the next levels. I would actually draw something right here so that we know where it actually is around. So this would be around 377. We could also front run it a little bit because it's a daily support, so it could just bounce a little bit off. But this looks like a pretty good, decent risk to reward ratio for the downside continuation plays. And this would actually play out the divergence for more towards the downside. If we do get that rise up here for the retracement, it would also help reset the RSI at least. So then more downside can come in after that, and we can see this 377 being hit. But again, we are siding for the bearish side and seeing how it works. Right now in the 15-minute time frame, we do see that the retracement is pretty possible, and this level is actually in confluence with, well, first that level of support, the 55 pocket, and now the 21 EMA on the 15-minute time frame. As of right now, it seems like there's strong buy-up wicks on these three candles right here, so we could see a high-low set in, and therefore a small little retracement up to the 21 EMA. The momentum also supports the idea of a potential incline, even to either reset the price action or just to bring it up in general. Our size also starting to break above the 20 level again as well. So we do see that it is pretty likely that we can see a retracement up here. Even if we wanted to, we could play the retracement up to the top. 1.22 risk to reward ratio. It's a bit more riskier, so you might want to scale down your position sizing, and I'd say it's a bit more riskier because of the fact that we are generally in a downtrend, so you want to be sticking with the shorts, though we can anticipate retracements. Let's do that and see as a test. Based on this, we're going to place a stop loss below this previous wick, but it's not as good because this is actually the previous low. So if we break this, then it could continue to the downside. But one thing we want to make note of is this is where the body closures were. So even though our stop loss is around this level, we want to pay attention to any body closures, because if we did play some sort of play around here and we did place it below this body, this wick here clearly confirms that it can easily take out your stop loss before running away to your side, your direction. So right now, this is what the practice play could be that we can look for. But in general, lower time frames, we're looking for retracement, and in the higher time frames, we're actually looking for more of a continuation plays to the downside because that's the general trend direction, and we want to watch the reaction to these support levels. And that's all for this video. Hope you learned something from it. Please like, subscribe, and hit the notification bell for more videos like this and continuations to see how the other plays worked previously. Cheers.